What's going on, everyone? Today, we need to talk about XRP, and I'll be honest with you, I might have been completely wrong about Jake Claver's bold prediction. He's saying that if XRP ETFs launch together, we could be looking at 3 to 4-digit prices. Yeah, you heard that right. We're talking about XRP potentially hitting $100, $200, maybe even $1,000. And get this, he thinks this could all happen by the end of 2025. Now, before you think I've lost my mind, let me break down what's actually factual here and show you exactly how we could realistically reach even that 3-digit price point. I'm going to walk you through this step by step using only the hard data we have right now. Here's where things get really interesting, folks. There are only 5 billion XRP left on the exchanges right now. Let me say that again. Only 5 billion XRP available for trading. Now, I think the SEC is going to approve all the XRP ETFs to launch at the same time, just like they did with Bitcoin. Of course, it doesn't look like they're all launching simultaneously unless the government decides to reopen. But if that happens, we'd most likely see every single one of these ETFs approved on the exact same day. As things stand right now, we know one ETF is going live on Thursday. The rest, they're looking like they'll start rolling out one after another throughout next week and the following weeks. And here's the thing, multiple sources are confirming this supply crunch. Grok confirmed that there's only 5.1 billion XRP left on exchanges. VET confirmed it too. Even BitGo just had what they're calling a rogue script that's been spamming the ledger with failed transactions because, get this, their account actually ran out of XRP. Now, some people are saying there are other exchanges that haven't disclosed this yet, but they're actually out of XRP as well. That's still speculation, so I want to stick to what we know for certain right now. Here's where things get absolutely wild. JP Morgan, one of the biggest financial institutions in the world, estimates up to $8 billion of inflows into XRP ETFs just in the first year alone. Think about this for a second. We've got potentially $8 billion trying to chase only 3 to 5 billion XRP that's actually available on exchanges. This is setting up what could be the mother of all supply shocks, pushing prices way beyond anything we're seeing right now. Depending on how quickly this institutional capital starts flowing in, XRP could realistically reach anywhere from $20 to over $100. We're talking minimum 2 digits this year, people. Now, JP Morgan only mentioned institutional demand in their analysis, but here's what they're not factoring in. Once XRP starts its breakout, we're going to see massive retail FOMO kick in at the exact same time. You know exactly what I'm talking about. There are tons of people sitting on the sidelines right now waiting for XRP to start popping off before they jump in. These are the same people who always say, I don't want to tie up my money right now. Let me see where XRP goes first. I want to see if the price goes lower before I buy in. Then, boom, XRP starts exploding, and suddenly everybody has to have this cryptocurrency because of pure fear of missing out. And guess what? They're willing to pay a premium to get in, time and time again. Let me clear something up that's super important. Grok confirms that spot XRP ETFs are required to hold the actual XRP asset, the real underlying cryptocurrency, to provide direct exposure to its spot price. This is what makes spot ETFs completely different from futures-based or leveraged XRP ETFs, which just use derivatives and contracts without actually holding any XRP directly. Every single one of these spot ETFs has to hold the actual asset. That's exactly why spot ETFs are so crucial to XRP's price. Remember when people used to say, well, there's already a futures XRP ETF. Those really don't move the needle on XRP's price, but spot ETFs, they absolutely do, and I wanted to make that crystal clear. But we're not done yet. You've also got Flare locking away massive amounts of XRP as well. They've minted 60 million FXRP and counting. And the demand for FXRP is absolutely insane right now. Here's Flare's ultimate goal. They want to lock away 5% of the entire XRP supply. We're talking about 5 billion XRP potentially coming off the market permanently. And that's not all. We're seeing treasury companies popping up one after another, all creating their own XRP treasuries. This could finally be the run where we actually see real scarcity for this cryptocurrency. So let's get back to Jake Claver's prediction. I think he's partially right on this one. I genuinely believe we could see 3-digit XRP if all of this plays out the way people think it's going to. Why? Because I think JP Morgan actually underpredicted the inflows into XRP.
When you combine institutional demand with retail FOMO, plus all these lockup mechanisms happening simultaneously, we could be looking at a perfect storm. Now, here's where I'm going to make a statement that might ruffle some feathers. I genuinely believe the XRP ETFs are going to absolutely outperform the Bitcoin ETFs. I know. The mainstream media and all those Bitcoin maximalists who go on these shows keep saying nothing will ever compare to Bitcoin ETFs. But here's the thing. I think they're completely wrong on this one. The institutions, they're already looking past Bitcoin. Even retail investors are starting to look past Bitcoin. So when the real FOMO begins in this space, it's not going to be focused on Bitcoin anymore. It's going to be all about XRP. Speaking of predictions, David Schwartz may have just accidentally leaked XRP's real price target, and we're talking $74.24. Here's exactly what David Schwartz posted. I am deeply and $74.24 in debt to Hugo Weaving, Agent Smith from The Matrix, for recording my new voicemail greeting. Now, David has a history of speaking in riddles and dropping cryptic hints from time to time. People immediately started speculating that he's giving us XRP's future price target. But honestly, I think this was just David being David. You know how he likes to mess with us sometimes. Before we move on, let me circle back to Jake Claver's prediction for a second. That 4-digit XRP price I mentioned earlier, which I totally forgot to break down, I think that's more likely to happen in early 2026, as more and more institutional money flows into those ETFs month after month. But by the end of 2025, there's definitely a chance we could see 3-digit XRP if the demand is as insane as I think it's going to be. Multiple sources have confirmed that there are tons of institutions just sitting on the sidelines right now, waiting to jump into these ETFs. We'll find out exactly how much demand there really is this Thursday when things kick off. Here's something massive that people aren't talking about enough. Cardano founder Charles Hoskinson just said that ADA is holding the line with XRP on ISO 2022 compliance. This comes directly from Charles. ISO 2022 support is essential to open banking and combining the traditional finance and DeFi worlds. ADA is glad to be holding the line with XRP, HBAR, Algo, and others. A lot of people think ADA isn't ISO compliant and can't be used within ISO messaging systems, but I think that perception has changed over time. It was always rumored to be compliant, and ISO 20022 is going to be a huge deal. Now, will this bring immediate value to XRP on day one? Nobody really knows yet. We'll have to wait and see what happens when ISO 2022 goes live on the 22nd of this month. Even if we don't see instant value, I think we'll see it build month over month as more and more people start using crypto within ISO messaging systems. And speaking of institutional adoption, check this out. DBS Bank, which we know is a Ripple partner, is now working with JP Morgan to build a tokenization framework for interbank deposits. This doesn't surprise me at all, because JP Morgan once said that Ripple and XRP are poised for significant adoption if they could beat the SEC in court. I still think JP Morgan is quietly aligning themselves with XRP behind the scenes, But here's the problem with JP Morgan. They want to stay in the past as long as humanly possible. They want to keep the current system we have now running because they're making absolute bank off of it. Think about all those ridiculous fees they charge for sending money across borders right now. Plus that annoying 3 to 5 day waiting period. All that money just sits there in their Nostro Vostro accounts, earning them interest while customers wait. At some point, all these banks are going to want that money flowing faster. And that's exactly why they'll eventually embrace RippleNet and XRP. At first, it's going to be all about stablecoins, because that's where the hype is right now. But later, it'll be all about cryptocurrencies. And the banks are definitely going to start offering crypto services to their customers. Why? Because they're not going to miss out on this gold mine. They're going to find creative ways to make money off this trend. For example, right now, you can earn 4% on stablecoins through various exchanges. But imagine if banks started offering you 2% or 3% as a new customer incentive. People who aren't in the crypto space would absolutely jump on that deal. They'd think it's the greatest thing ever. Because right now, traditional banks are only giving you maybe 1% on checking or savings accounts. So when they start offering 2% or 3% on digital assets, it's going to seem like an incredible opportunity. But here's where it gets really interesting. People will absolutely go with the bank on crypto offerings, even if the returns seem modest.
Imagine the bank says, hey, we'll offer you 10% annual returns by holding these cryptocurrencies. People would jump on that immediately. But here's what most people don't realize. Cryptocurrencies can do 10 times, 20 times, 30 times, even 40 times returns over very short periods of time, especially during bull runs. So if the bank offers their customers a generous 10% return, guess what? The bank gets to pocket all the rest of those massive gains during a bull market. The bank could still make an absolute fortune while their customers are perfectly happy with their measly 10% returns. This is just one theory on how banks can make money by getting involved with crypto. But trust me, they're going to figure out tons of creative ways to profit from this space. Here's the bottom line. Banks have absolutely no choice but to embrace this technology anymore. Crypto isn't going away. That ship has sailed. Remember when people actually believed cryptocurrency was going to die off and disappear? Those days are long gone. Crypto is now solidified as a permanent part of the United States economy. Trump is pushing full steam ahead with crypto initiatives. We've got politicians across the board pushing to bring traditional finance and the digital age together like never before. There's no more crypto crackdown. Gary Gensler is out of the picture. Everything now is focused on making the United States the undisputed crypto capital of the world. The banks have a simple choice: get on board or get left behind. And honestly, all of this plays out perfectly in our favor as XRP holders. Why? Because when everything is said and done, we all get rich in the end. But until that day comes, here's my advice. Stay patient. The pieces are falling into place exactly as we've been predicting, and the payoff is going to be worth the wait. What do you think? Are we about to witness the biggest wealth transfer in crypto history with XRP leading the charge? Drop your thoughts in the comments below. And don't forget to smash that subscribe button if you want to stay ahead of all the latest developments in this incredible space.